Welcome to the Lowdown Podcast, the show where we dive deep into the topics that directly impact the evolving originator. I'm your host, Connor Bartley. Bam! And joining me today is someone who's seen just about every side of the mortgage business, from the secondary market to underwriting to originating. And with over 20 years in the industry and nearly $1 billion in funded loans, he's built his career around one simple goal: helping people make home ownership happen. He's known for his experience, his transparency, his ability to make what can be a stressful process feel seamless. Justin O'Donnell, welcome to the Lowdown.
Thank you very much, Connor. I appreciate it. Thanks for the introduction.
Absolutely, man. Very excited to have you on the show. It's been great just sort of getting to know you a little bit and our interactions leading up to this. And so I'm excited for you to share your story and have others be, inspired by the journey. And like most stories, we start from the beginning. And so just for context for anyone who's listening and things like that, do you mind sharing sort of how you got into the mortgage business and what this journey has been like through the different departments and different parts of mortgage that you've worked in so far?
Yeah, of course. So I started out in a completely different industry, in the hospitality industry. That's what I went to school for. I worked and went to school at the same time. I got completely burnt out. It is a very tough industry for everybody out there who transferred into this industry from the hospitality industry. Chances are they're pretty successful because it is a very tough job. It's mentally and physically exhausting.
So
And
when you say hospitality, though, do you mean like restaurants, hotels, like what side of
yeah.
it?
So restaurants and hotels. So I first started as a dishwasher when I was 14 in a small beach town I grew up in, and every summer thereafter I was working in a restaurant. And so I figured when the time came, I should go to school. And this is during the Emerald Lagasse,
Bam!
bam, kick it up a notch. Yeah, beautiful, show of cooking.
Yeah.
And I was like, my dad was like, well, what do you think about that? I was like, I don't really know. He's like, well, let's check it out. And we were down in Charleston, South Carolina, Johnson and Wales, and I'm from the Philadelphia area. And I was like, my gosh, palm trees and beaches. I can go to school here. So I was sold. So I did it, and then I ended up getting in the class, and then realizing that more chefs were like Chef Ramsay, not like Emerald Lagasse. Like it was rough. I've never seen so many grown men and women cry in my entire life. It was amazing. So I didn't like it. I went to school full time, and I worked full time to put myself through college. And then I really didn't like it at all, and I was burnt out. And I graduated. And when I graduated, I thought if I could just focus on work, maybe I would like it that much better, because I would be at school studying the whole time as well. And I still didn't like it. I went to Greensboro, North Carolina after that, in the management position. And then I had read the book Rich Dad, Poor Dad, and I was like, this is what I want to do. I want to be surrounded by individuals who invest in real estate, the economy, this weird credit company called Equifax. Apparently, it like this basically makes you who you are in this world, and it really is the basis of it all. So I read that. I told my boss ahead of time that I'm going to give it a year. We'll see what happens. And I'm still friends to him this day. He manages the Hilton, I think, in Cincinnati now. And that was it. So once I read that, I realized I didn't want to do this for the rest of my life. I was 22. If I just made a left turn and went into a different industry, because I don't mind the hard work. It's just that I would like some kind of freedom, and I would like to be much more financially successful, because I was making $35,000 plus overtime as a manager. And I was working, New Year's Eves, Easters, all the holidays. And that's it. So I went out and met a couple of my mom's friends who were successful. There was a couple in IT. There was one in the scrap metal industry. And then there was a cousin here locally in the DC metro area who was in the mortgage industry. And I asked him what he did for a living. And he said he was a loan officer. And I had no idea what that was, because that was something we didn't talk about at our breakfast table at our house, let alone what a mortgage was. And he explained it to me. I just kind of went to his interviews, and I ended up getting hired. And from there, I got hired into like the mailroom, quote unquote, like the bottom of the bottom. And that was it. I didn't mind working hard, and I had a ton of student debt at the time. So I just really worked as hard as I could. And I didn't learn what to do. They said this is when the first refi boom hit in like 03, 04 ish. They said, just come in. You can have as many hours and overtime as you'd like. Here's a key fob. Come on in. I was like, okay, what do I have to do? They said, you have to lock loans. And I was like, done. What is a lock?
Right.
You got it. So taught me what a lock was. It wasn't that hard. And then I started locking all these loans and doing revisions. And then the person in secondary marketing who left and did all the second trusts, he left to go to, I think, Countrywide. They said, do you want to take his position? And I said, sure, why not? And so I took his position. I learned the second mortgage part. And then after that, I just kind of grew through the department. I ended up managing it in like 2 to 3 years. It was about 24, 25 when I started managing that department. Okay. And after that, I work very closely with post-closing and processing and underwriting. And I got to know a lot of people. And that was kind of the first stepping stone into where I was going to go. And then I went to become a loan officer assistant after that. And that's where I was. That's really kind of how I grew and morphed into this industry.
Sure. And so along that path, was there a moment where you felt like, okay, I'm in for the long haul now, where you said this is the career and not a job? And I know you got into it saying you'd give it a year. Clearly you stuck with it a little bit longer. What was that tipping point for you?
So I wanted to make a career out of something. Like I wanted to stay in an industry. And I saw, this is during the boom. Okay. So I saw money hand over fist at this time. There was no TRID. So there was none of these heavy regulations that were going on. And I was a very small fish at that time. And, there's a lot of money being tossed around. People were going to Ruth's Chris, which was next door, every day. And, I was drinking Johnny Walker Blue. I was like, Johnny Walker Blue? Is that good? They're like, this is the best. I'm like, oh, okay, sure, why not? I'm 24 years old. I have no idea. So after I worked there, I was like, this is the greatest industry of all time. And then that's when I was like, this is the industry for me. This is what I want to do. I want to learn more. That's really when it sunk in to do this and stay in this industry for a very long time. Who knows how long it would be, because I didn't know at the time, but that's where I saw myself staying in and learning as much as I could and absorbing the industry to then go out and originate. Because my goal was to become a loan officer. I just needed the background and the foundation in order to do that.
Yeah. Well, I love that you had that opportunity, because, nowadays a lot of people come in and it's sink or swim. You're going to be a loan officer and we're going to just throw you to the wolves. And some people figure it out and some people don't. And, a lot of what I have found here as doing this show, because there have been some, guests that have come on that were much younger. They came into an environment that I felt gave them a different kind of advantage, where they were joining these high producing offices to be an assistant right out of the gate. And so they got exposed to all these different loan scenarios, and they got to see the work ethic that it takes to be, a top producer. And then they took that and, went on to become a top producer themselves. But you took a little bit of a different route and got, that background experience of the business and really got to see how the sausage was made a little bit more.
Yeah.
What kind of advantages do you feel that gives you?
It really helped me understand the industry, because not a lot of loan officers, I'm sure they have a pretty good idea, especially top producers. They don't know what operations go through. Like they know what a processor does, they know what an underwriter does, but they don't understand the post-closing side of it. They don't understand really what comes into it. And it gives you a really good idea of, after the loan closes, it doesn't mean they're done and it's over and done with. You get the clear to close pop up on your screen. You're like, oh, great, loan's set, we're done. But then there's the whole funding process of it all, right? So you have to offload it to the secondary market. So it gave me a really good insight into the secondary market, into compliance, into processing, in that world of operations, which gave me a huge respect for those individuals in the operations department, because they're the ones that do the work behind the scenes that make us look great. And so it allowed me to understand truly what happens after a loan closes, and even during the process too. Whereas a loan officer, you're just kind of on the front end of it all. You don't really see too much of the back end. Yeah. So I can explain to borrowers too a little bit more, and it separated myself because I started originating when I was pretty young, and I look young. And I'm not saying that to be like big-headed or anything like that. I just look young, and so the only way I could compete against the loan officers who are seasoned and have been in the business for 10 or 20 years is that my knowledge of the market and the secondary market and what happens and how interest rates go up and down and so forth gave me a little bit more of an edge to compete with the ones that were in the business for 10, 20 years. And that was huge for me. It was an easy way for me to really compete.
Yeah, that's great, man. And so you've come all this way. It's been a number of years. You've almost funded $1 billion in loans. Is there a story out there or a particular, someone that you helped or a loan that really still resonates with you today?
Yeah, there's a couple of them. One I did when I was first kind of like a rookie going into it. So I was in LOA until 2009 when everything came crashing down. So I didn't go out and buy the boats and the cars and the houses. I had very limited overhead, which was good. It was bad because I didn't make all the money that everyone was making hand over fist, but it was good because I didn't have any expenses at all. I had like nothing. I eliminated almost all my debt. And I'll never forget, all these lenders went by the wayside. And this gentleman called me up and he said, listen, I need to talk to you about my loan. And I was like, okay, what's going on? He said, my wife bought a house when I was in college up in Philly. And I said, okay. He said it was one of those 80-20s. And I was like, okay. He said, it's a 5-year arm with a HELOC. All right. He's like, I'm just afraid when this thing adjusts, like, what am I going to do? And I said, well, in fact, if it would adjust today, your rate would go lower and your home equity line of credit is going to start going down. So in fact, you're going to actually be in a better position. And he couldn't get it. It didn't understand. Like, it wouldn't click in his head. And it's hard to explain mortgage banking, how ARMs work over the phone. At that time, I had a major whiteboard. It was huge in my office because I would bring people in all the time. This is back in the day when everything was in person. So I said, listen, bring your documents, especially your promissory note, and we'll go over it. I'll spell it all out for you, A to Z. So he came in, I explained it to him, and he understood it after that. And I said, I had to ask him, how did you even buy the property? How are you on this loan? And he's like, I was in school. He ended up becoming a very successful anesthesiologist. And I still talk to him to this day, as a matter of fact. But I told him that, and after that, his heart, like he changed his whole perception, and his heart was in the right place then. He wasn't anxious anymore, and he realized that everything was going to be okay. And so after that, he's like, I need to buy you lunch. I'm like, okay, sure. Let's go grab a bite to eat, and let's stay in touch. And then after he graduated, he was buying a very large Envy home. It's a track builder here in the DC area. And he said, I don't care what kind of incentive they're giving me, I'm using you. And I was like, well, thank you. I appreciate it. Why? He's like, because you took the time to sit there and talk to me about my mortgage and make sure that I was going to be okay and my family would be okay. Yeah. And so that's when it kind of hit home that it's more about the clients and the borrowers than it is about dollar signs, because even though we do this every day, these borrowers, they have no idea what goes on, out there. And it felt really good. And I love to help people. So it felt tremendous when he was able to see the light that he was going to be able to have his house and not foreclose and, realize he was okay. He was in a good spot. So, and then I got a really big deal out of it years down the road. after
Right.
he graduated, medic school. So that was good.
Well, so did that experience and others like it kind of inspire the mortgage maze? I researched a little bit, saw that you had written a book in the past. And so I'm just curious kind of what brought that about and if you can share some about that.
Yeah, so it did. So it was more to help individuals. It's 99 cents on a Kindle Fire, right? So it's 99 cents. And I wanted to write it to help people understand why we collect all this information, because people just think it's too much. They get a little annoyed at the fact, especially the self-employed borrowers that have businesses or business flow through businesses and so forth. But it helps them understand why we do it. There's a lot of people who don't remember the financial crisis and the housing bubble, and that was lack of documentation. And so now we don't document as much as we do now, in 2025 as we did in 2015 and 2014 and so forth. But it gives them a really good idea as to what we see as a lender and the reason why we do what we do, and to prepare them for what's to come their way so they're not blindsided. And that's usually what I try to tell other loan officers. Like, most people are people and they'll understand as long as you tell them up front what we're going to expect. And that book is very short, it's very to the point, has all the acronyms in a small glossary like LTV, LOX, DTI, so on and so forth. So they understand what it is, and it's very easy to read. It helps you understand that you get pre-approved before you ratify a contract. You don't, go out and shop for a mortgage afterwards. Just stick with the loan officer. They'll get you to closing, especially if they were referred by a real estate agent. You can shop around, of course, but just stick with them. You spend time with them. They help you. If they're good at what they'll do, they'll even help you with your credit. And that's really why I wrote it, because there's so many people that don't know. At least it can give them an insight as to the know and the knowledge of our industry and how they can get ready and prepare themselves to buy a house.
Right. Yeah, I love that. I think that's a great value add that you took the extra time to do, and it kind of speaks to the extra level of care that you provide. And then I guess just on that topic, I mean, there's the other side of what you do as a lender, which is working with the referral partners, the realtors, financial planners, attorneys, whoever's kind of within your sphere of influence. What would you say are some of the value propositions that you bring to those relationships, and how are you showing up in that part of the business?
So I always take the time to so we pre-underwrite our files, every single one. We make sure we get everything up front. And with my referrals, a lot of borrowers, I have a lot of repeat business from my borrowers, a lot of their friends, family, and coworkers. My real estate agents that I work with, wholeheartedly, I don't let them chase documents. If they want to chase documents, they can. That's not their job. Their job is to sell real estate, right? So me and my team make it really easy on them, where you just send them our way. We get them pre-approved. We pre-underwrite the file. If there's any red flags, it's all addressed up front. So it goes into as smooth of a process as you possibly can do. And so I also reciprocate, because I have borrowers who will reach out to me that have worked with a realtor that I didn't know, and they don't like that realtor anymore for whatever reason. But they really liked me, and they would say, "Hey, do you have a good realtor that you work with?" And I do. And so I will reciprocate, and I'll send that over to a really good realtor that knows what they're doing and can really help them get in a better position, that really cares. And so I try to reciprocate that as well. And I also try to understand that we're a team in it together. It's not just them and it's everybody. There's a title company as well. And then I also try to introduce them to a CPA or a financial advisor or a trust attorney, depending upon what their goals are in life and where they want to be. So when I try to build my referral network, I've had to cut some realtors loose. God bless them, nothing against them, and I'm not trying to be conceited at all. It's just personalities have to mesh, and
Sure, yeah.
You have to be able to work well with your team as a camaraderie and not just on an island as the lender. that we are a team and we work together.
Yeah, I love that. I was actually speaking yesterday with someone who was saying the same thing. They were, given advice earlier in their career to not be the lender for every agent, and just to build a network that's very specific to them, and just really control the door. Right? I mean, if you in life in general, you're going to be sort of the sum or the average of the five people you hang around with, I guess is kind of what they say. And
Right.
the same goes in business. And, the more selective you can be along the way, the better that will serve you in the end. So I think that's
Yeah.
a great call out.
Yeah. I mean, I've sold my soul to the devil a few times just to work and, get business in the door. And then after a couple a couple of times you're like, why am I doing this anymore? I can't stand working. But there's a million loan officers out there. It doesn't have to be Justin,
Mm-hmm.
I think we should part ways. There's plenty of loan officers that could take your business. I just think, you've been showing houses for how long? 4 weeks, and you want me to pre-approve them at 8 o'clock on a Sunday night? I mean, really? Come
It's
on.
not you, it's me, right?
And I would do it hands down, but it's when it happens over and over again, there's a level of respect that I think that everybody has to have across the board, and that's when it comes into play. But we do this and do it with my title companies too that I work with. Really try to help reciprocate and help everybody grow. Ultimately, spend more time selling real estate, spend more time working on your title company. Spend more time as a financial advisor. We'll take care of it all. Ultimately, is what it
Yeah,
is.
I love that. So what keeps you motivated today? You've been doing this a while. You're still, growing, things like that. What are the things that, keep getting you up in the morning?
So I really love what I do. I mean, I love kind of all aspects of it. Uh, when you're a rookie and you fail, it's so hard. It's so hard to be like, how did I do that? Or how did I miss that guideline? As you get better and better and better, you're still going to fail. You're still going to mess things up. I mean, guidelines change. But I really enjoy helping people, and it's challenging. We are problem solvers. I wish everybody was W-2'd and putting 20% down, but that is certainly not the case. Everybody has a different story and a different profile. So I truly do I love what I do, and I love helping people. And you play, as a loan officer, a very large part in someone's life, this chapter. And I don't want any of my borrowers to be at a barbecue and say, I just bought a house. It was the worst experience I ever had in my entire life. I never want to do it again. I want to be the one that says, oh, you did? Mine was fantastic. We flowed, we ratified, we closed in 14 days, and there was no hiccups at all. Everything was great. And I want to grow. I want to grow as big as I possibly can. I retired when I was 31. I was tired of the industry. I got burnt out, and I wanted to go back and surf and get in shape, and that's what I did. So I totally left the industry, and I came back in 2016. So I've built my business basically from the ground back up in 2016. And so I want to get back to that level and then surpass that level now, especially with all the coaching programs, all the technology. It's relatively simple to do. But I like challenges, ultimately.
No, I love that. So what are you focused on for the next 3 years? I mean, what's next for you as you grow? What are some of the skills you're working on, and what do you think is going to be essential for success for you in the future?
So I've been told many times I should be doing more marketing on social media. So that's one of the goals for sure. We have a program over here. It's a great program. Works very well with financial advisors. I want to become a pro in that. That's my goal, is to become a pro in that. It works very well across the board with everyone. It's you pay your principal first and interest later. It's a great program. Ultimately, I want to build a team, and I want to help other individuals. Like we talked about in the beginning, and like, hey, just come work for me, and I'll teach you the ropes. And you get this laptop, and you're just like, okay, what do I even do? But if you could, there's a lot of really good producers out there. They're younger. They just don't have unfortunately, they don't have the support. And I would love to help support and help the younger generation grow and get to the next level and understand that you can accomplish a lot. You just need somebody to help you grow, because there's a lot of stuff, unfortunately, out there that will blindside you and you have no idea even it's coming your way. And so if you can help those individuals grow because they are passionate about this industry and they want to grow into it, that's the biggest thing. And I want to build a team, a very large team, and a very well-rounded branch where everybody kind of helps everybody to grow as well, and teach and get them to, whatever level they want to get to. They want to be $10 million, $15 million producers. They want to be $70 million producers, whatever the case is.
Yeah, I love that, man. You take the elevator up and then you send it back down, right? And, having that servant attitude of let's help the next generation. That's part of why this podcast even exists. I saw that there were a lot of really good originators that were getting stuck at around 3, 4, 5 loans a month, and they didn't have the office culture or that mentor or leader in their immediate surrounding or on their team that they could go ask and spend time with and kind of pick the brain of on how do I get to 8 loans a month? How do I do that? And so there's been sort of this artificial glass ceiling that's been placed over a lot of really good, well-meaning and well-intentioned, growth-hungry sort of originators that just don't know how. And so, I love that you have that heart to want to go find them and bring them up and help them out. Any final pieces of advice, anything that you want to leave with the audience before we call it a day?
No, I would say, if you're, depending upon your level of production, if you really want to grow, find a really good manager that is willing to take the time and help you through the process, and surround yourself with people who are doing double or triple your production, because water typically rises to its level. So if you're surrounded by, lower producers, but you want to grow to a bigger one, surround yourself with them. You'll automatically grow because they're growing and they're been around the block, and your manager will help you get there as long as you put it in the work at the end of the day. That's what I would say.
Couldn't agree more.
That's probably the best advice I could have. Giving someone a laptop and telling them to go produce is very difficult to do. So you need that background, and you need the people in the support system for sure.
Yep. Awesome, man. Well, I appreciate you being on the lowdown, Justin. Thanks for joining, and high five to you, and best of luck to you in your future.
Yes. Thank you very much, Connor. It was great being on the show. I really appreciate your time and having me on here as well.
Absolutely.
All right. Take care.